Hello. Hello. ICS War Room Intense Coaching Session. We're going to do a follow-up, weekly follow-up with former trainee, now member of the team, Alan Vergara. Hello. 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 She. Hello. Hello.
Hello. Oh, hola.
Hola.
Yeah. Were you hearing me when I was saying hello?
No, at the beginning, no.
Oh, okay.
Okay, how are you? How's it going?
Okay, I'm okay. You saw my last Telegram message?
Yeah, I saw it. Yeah.
Whatever.
For something that is too short, I don't know. It doesn't sound that good, so
yeah.
probably have to pass.
We'll just pass ever.
Yeah, probably just pass. Okay, I have in front of us the S&P 500. As usual, you get the recording with all our notes, okay? We're going to set it for weekly, although next week we probably have to do it later. My time probably will be like around 2 hours and a half from this time, if that's okay with you, which is more convenient for you. I mean, it's late for me, but just a little bit of schedule conflicts there that I have, okay? And we will do this. We'll do this once a week, just review everything and see what happened. Real quick, I want to take a look at the S&P 500. As usual, we're going to talk about Trend Fibonacci, price rotation, Wolf wave, everything that we have been doing over all this time is just repeat and rinse. That's all it is. It's what we call constant execution. You have to be in front of the screen. You have to see the patterns. And what we're going to develop now as we touch bases every week is this. I'm going to remove everything. And just by looking at it, you must master the capacity to recognize what may take place. That simple. It's one of the trainings I'm doing in simulation. We probably do it together. I have a software that I'm getting. And we can simulate everything. Currencies, futures, everything that I can get data. But mainly will be at the beginning currencies. But what you're going to train is not the asset. You will train your eye to develop pattern recognition, trend Fibonacci recognition. You will be able, by just watching at the chart, you're going to look at, and I will show you the software today so you can get excited about it, because I'm super excited of acquiring it for my for my teachings.
Yes.
Just by looking at the chart, you will have to master, set up your rotation prices, doesn't matter the time frame. You will be able to see the trend Fibonacci.
Really?
The Wolf wave, the Wolf wave, it's a different story, but mainly the two components that we study at the very beginning, because we only use Wolf wave as support of everything else that we have. Yes, really. Just looking at the chart, plain and simple. Like, I know I'm removing, so you already have the bag information on your subconscious and on your conscious. But just looking at this, I know that this section here is the pullback. Okay.
Yeah.
Obviously, I know that there's trap, so there's so if I were to take my trend Fibonacci, I just do the projection, and I know that there are levels here that I will be looking. So I know that if this is the full range, and it goes all the way from this level, 31.76, all the way to 33.35, I have about 170 points. I start doing the math on my head, and 170, 50% of that, 170 is 75. So we'll be around somewhere here. Okay. So you start getting this idea. 30, you see 35, something around here, 75. So you start working on that idea of knowing. So this is the 50%. A little bit more, it will be the 61, and then retracement. So this is what you have to do. This is how you're going to grow. Just looking at the chart, you will see it. Simple as it is. So this is the next level that we're going to work on. Now, of course, let me just move this. We're going to go back to equities. Remember, indexes, we use the 20 exponential moving average. And we're going to repeat this over and over again. Doesn't matter that we already did it for 30 sessions. We're going to repeat this all the time. So then you have that moving average, and now we're looking in the short term. We can see how gold has been pushing lower, and now for the first time, we see some sort of sign of that the trend is exhausted. First, we have this push that failed to break 33 and exchange. Then we have the price breaking all the way to 33.39. No open and close and open above 33.40. So that is an indication that this game is over, at least easily in the short term. How low would go? Well, the first threat of this bullish trend will be support at the 20 exponential moving average with confluence with the 38.2%. That will be 32.73. However, we know what markets tend to do. We know how the market has to play retail traders to think they're in the right direction and then squeeze them. So don't be surprised if prices break here, just like this, okay, and then rapidly reverse. So we cannot be surprised if this happens, okay? What this will do basically is support the SPY put that we have that so far was in the money at $1.16. That's fine. This put it's at 325. So from this point, everything that pushes lower will increase by 19 cents. The put. So if we have a push here about 16 points, another 16 points would add 19, and then another 16 points will take us around this level. So we'll have this 3 times 18 for about 47 cents and a change. I think that will be 47 cents, and that will pretty much give us 44, I think. So 20, that's 20, 40, no, 40, oh no, 50, almost, so the 8, no, yeah, is it 2020, that's 40, and then that will be 57 cents, okay? So if you think about it, and we, some people, at least I got feel at somewhere around 86, others got it lower, we're talking about close to 50, plus 50% on that move, okay? And that will be enough. It won't be triple digit because we're basing our decision in a short-term move. So if we can get plus 50%, we will be served on this SPY put and make it something that we can work on. Okay, so that's what we're looking at the S&P 500. The other thing I want to share now is the idea that we are on the, let's see, where is that? Let's take a look at the SPY 325 put. I'm going to take a look real quick for the purpose of the recording so you can rerun this again. So we see where, there you go, a full, you see, this is what we're going to work with the perspective. Look, 0.45% down, okay? It's giving us a 0.23 cent push, okay? So the S&P went down, actually about what, 20 points today? Let me double check. No, actually 15 points. Okay, so the S&P went down 15 points. We go another 15 points down and we get the same pattern. That will be another 23 cents. So 0.91 plus 23 cents. That gives us 4, 10, 1, $1.14. And then we got another 15 points down. That will give us another 23 cents. That will put us at 127. And then, well, maybe if we get another 15 cents, then that gives us another 23 cents, and we get 150 on that put. If that were to happen, we're talking that we're close to, I would say, 80%. So this is what we may expect. Of course, at some point today, only today, we have a push higher to 116. So it's a little bit more.
Yeah.
So that's something to consider. But again, it all depends.
Yeah.
It all depends. Okay. We have to be conscious. And if we see plus 80% of the table, we are going to take it. Okay. So,
wow, it went all the way up to 116.
Yeah, exactly. Today. You see?
Wow.
So one of the things I would advise everyone is to have a sell limit at 150. That I will do. So everyone has a pending order sell limit at 150, because these moves are fast. Okay. And not all the time everyone is going to be ready in front of the desk. But if we plan, it's about planning, we'll have a big chance to be successful. Okay. That's the case. Now,
so aren't you gonna trade the call for that?
Exactly. Here's what we exactly what I would wanted to share as well.
I'll jump in. I'll jump in on the call because I wasn't able to jump in on the puts.
Yeah, on the call, I want to go back to the 340 because this is an interesting scenario. So look at the volume now. Okay, we're looking at still the same pattern. Nothing had changed. Okay, and 80 cents now. If we look at the chart, let's take a look at the chart, the 1 month chart. We have this peak, we have this base at 40 cents. I wouldn't be surprised that we are in a position to go back to 35. I think that was the entry we had before, correct? If we get that entry at 35, again, look at how much it dropped today, 17 cents. So it means that it continued dropping, it will drop 17 cents while the put itself is appreciating between 23 to 36 cents. What we want to do is this. We want to be in a position that we sell that put at a 150, get something close to 80%. And then we want to acquire, okay, the call, the 340 call, not because we're going to be in the money, but because we're expecting a reversal all the way to 33.70. So we'll be above 340. We'll give that extra push to the call. And then remember, this one went actually 100%. It went 100%. It went to 90. Okay, so now we're going to prepare. Now, I want you to focus on the volume, 1,366. It's tradable. The spread is only a cent. The open interest is 51,000, almost 52,000 on the open interest. So it's something that we need to have on the table. And next time we're going to go for 50 plus. Now, if we get 50 plus, we get 100% altogether. We're looking at a total combination between trading the put and the call all together. Let me just call my pen. We'll be looking at easily 120. Or why not? We'll be looking at plus 160% altogether on both positions on the SPY. So this is something I want to have on the table. Very important. Okay. Now. Perfect. So this is what we have in this case. Let me just remove my pencil. There you go. Okay. Now we have that out of the way. Of course, let's review what we have so far. BA, the 250 put.
I'd allocate 1,000 for that.
Yeah. Well, you see, this is going back, but this is just a little bit of a blip. But this is what I said. We already made what? How much we made? We already made 200% in 4 days, based on just as registering the register for the records. Just how much we made, and you see now it's reversing. All that's fine. Went all the way back. Perfect. Not a big deal. Now, I want you to take a look at this. The spread now is lower. It's only 5 cents.
Yeah.
The open interest went up. 2,066, and the volume now it's higher and higher. Okay, so someone is noticing it slowly but surely. Now,
Yes.
at the same, yeah. So at the same time, I want to take a look what's happening on. I'm gonna
It's
go
too
now.
late for me to join in.
Not yet. I wouldn't say that. I wouldn't say that because remember we bought it at around 58. Okay, it's 86. It's not a big deal.
Yeah.
30 cents higher. And if it push higher, which I don't think, I just think it's just bouncing from, you know, remember when something goes down really bad and then crashes? Actually, if you were to throw like a dead body, when it hits the floor, it actually does like a little jump and then crashes. That's a little bit of that, or even it's the common Wall Street concept of dead cat bounce. You take a cat, you throw him out of the window, the poor thing will jump. It's already dead, but it will jump just because of the force, and then will continue the trajectory to the floor. But on the first jump, it was already dead. Okay, now let's take a look at the wolf wave that we have all the way back from June 2016. Okay, do you see it? It's in front of you. Okay, perfect. So take a look what is happening here. First, we have this rotation. This is the initial break that we see. This is the initial break that we have. And obviously, we are now on a bearish trend. There's nothing new. But if I were to draw an idea of this bearish trend from these points, I wouldn't be surprised if we have a bounce just out of the blue before going down. Now, on top of that, if you can see here, I'm going to add more evidence. I take Trend Fibonacci. There you go. From 38.2%. It broke the first target, which is the 0.0. And if I also take a little bit more information, the expansion of this area, and I take it from this level, there you go. Where do we go? All the way down to $285. So this is not over. Far from finish. So I'm just going to add this.
I'll just wait for a push.
Yeah, it can push. It can push more. It can push. Look, based on your education, it can push all the way higher to 23.6. Shouldn't be a surprise to you. Okay.
Yeah.
It's not a surprise. Pushes here. Let me just take the area. I will send this to you so you have this chart. It can go all the way to that level. And there we go here. Okay. There you go.
So push all the way up to 38.2 or 23.6?
$332.
Okay.
Okay. And this is the projection. Okay, number one, this is the projection from the Trend Fibonacci. All this way, you see that the resistance here, then comes down, pushes up, and short. Now, since the Fibonacci crossed to the downside, the 0.0 level, remember, it's activated. Once it's activated, remember, activated. Officially, it's bearish. Now, what we want to do is make sure that it does not, in this case, it's bouncing higher. There's no close and open above 23.6%, which is equal 332. So it may surprise others, but it shouldn't surprise you at all. And once we hit here, then so that Boeing put 250 has room to go and has money to be made. Okay. With this, we're gonna keep this, and I'm going to send this chart to you so you have it. Okay, I want to make sure you have it.
Yes.
Okay. There you go. There you go. Okay. Now we have that information. One more chart that I want to take a look at. Boeing daily. Okay. We're looking at perfect zones. Do you see the perfect zones, the levels? Is it perfect? Okay. So now look at the level 327. Not a surprise. The level we have based on Trend Fibonacci 332. Look at the bearish trend line, the inside, the outside. Not a chance. It's hard to say that it will break up, but it's Wall Street. We never know. Okay, remember, we never know. But on the daily, this is what is taking place. Next support will be 295. After that, we have the 250. Let's take a look at the weekly. We have some more information. You can see here again. Look how perfect the zone is developed, all the way to $324. We have this trend line, as we discussed before, inside trend line, all the way coming for $133 back sometime in November 2016. We are below that trend line. This is heavy. So 293, and then next stop 275. You see? This is what we have to pay attention. Let me see if we have something in the monthly. Nothing that has my interest. Take a look at the levels. You see this? There's this trend line. You can take it all the way to 328. Not a surprise. Once again, the 4-hour chart. 328 as well. And see this massive resistance. Do you see this? All this. Look at to the left. August 2019. Again, let's see if we have more information. 2019. Look at this all the way back. Massive information. There you go. Absolutely. Not a surprise. It's in the 4-hour chart. And once we break here, game over. Means
game over.
It's a hot potato. Dead. Hot potato all the way down. You can bring this.
Toast.
It's toast. It's already toast. I said this before. It's already toast. So I don't know how much money you want to throw at this, or other managers want to throw at this. This is just game over. Absolutely game over. And this is what they call in it's an expression in Spanish, máximos decrecientes, and it will be lower highs. So usually is higher highs. This will be lower highs. Lower highs, higher lows, boom. It's a bearish pattern. There's not much to say. The fact that they go out, we discussed this when I call you in the afternoon, and well, your early morning. The fact that you say that you're not going to wait for the body regulator to approve your plane development or production, it's bad enough already. So this is it for this company. There's not much happening with the rest of them. I had the idea on let's go, where's Goldman Sachs doing right now? Had the idea on Disney, but I'm gonna pass because we already have a lot going on with FXX. Let me just go back for a second.
With
back
FCX?
FCX, Freeport. I already have a lot with Freeport going on. I want to point out something. This is quite interesting. Look at how the price, we started buying at $9 Tupperware. Do you see it? Tupperware brands, TUP.
Yeah.
So it started there at 35. Now, this is funny because the company still is not doing much. The open interest on this one is 431. The volume is pretty limited. The low was 10, the high 336. And look at the fact that the company is now trading below $9, almost 4%, a little bit more than 4%. And the ask is still the same. Still the same. Give me 1 second, please.
Yeah.
1 second. Okay, I'm back. Thanks for waiting. Okay,
Mm-hmm.
so this is what I wanted to point: the fact that how the company is dropping in prices, the stock, but the call itself is pretty stable. Okay, so this is a good sign. This is a good sign because what it's telling us is that we want to know how
That's a
fast
good sign. If it's not moving,
it's not moving at all. And remember, we still have time.
so why would that be a good sign?
It's stable. We don't want to be in a company that just moved 4% and then it drops 50% the call. We don't want that because that would be pretty bad.
Oh, okay.
So yeah, of course, we don't want something that is fragile. And that's one thing I want to keep in mind. So this is something to pay attention. We still have enough time, so I'm not concerned about Tupperware. Now let's move to CLVS, Clovis Oncology.
I could probably jump in Tupperware.
Yeah, this is if it looks this way, absolutely. Now, Clovis, I have a register at 90 cents. It's right now going back again, 70 cents. Something I want to go and take a look. The delta is 26. We have plenty times as well. Plenty time. Look at this 925. The company moving only 1.2%. 11 cents.
What was your enterprise?
90 cents. I have
90 cents.
Yeah, I have it at 90 cents. But it's, I mean, it has a plenty
time.
Ooh,
this would be my perfect entry right now.
Well, you will get it 20 cents cheaper than the majority of the people. So yeah, look at the spread is 15 cents. You're getting at 70 cents. We got plenty of time. Look how, this is the tricky thing with these companies. Look at the company because the market is trending lower. The company is actually up 1.2%. Now for this 1.2%, the company tick higher 10 cents. Not a bad thing.
Yeah.
Not a bad thing.
No.
Now, if we think, for example, let's do the math. Let me do the math for the purpose of this exercise. So we have 10 cents out of 1.2%. There is a register 33 potential upside by 1. That's 33 times. Multiply that by 10. That gives you, well, it gives you 33? No, this is a lot more. 33? Really?
A lot more.
No, more. I think it's more. It's a bit more. It's a bit more, but yeah, because no. It gives you $3.30. That's what it has to give you.
Yeah.
Because 1.2, that means that 10% will be $1, right? Yeah, because yeah, almost $1. You move another 10, there's another $1. You use another 10%, there's another $1. You get $3. You see? And that is equal to and this is conservative. This is conservative, remember.
And we got time.
And we got time. And once it explode, because if it's explode before that, you collect 300% in a month or 4 weeks. Because we don't know. The thing with these companies is that once they get into these drug developments, because that's what it is. Clovis Oncology, cancer. It's right there. So
yes.
That's the thing with those companies. You don't know exactly when they are going to explode. There's some kind of FDA approval waiting. They get new results. We don't know. But what we do know is this. One, we have time. Second, this is a company that's trading already higher. Okay, it's a company that's trading higher.
Buying strength.
Yeah, we're buying strength. Look at the open interest. There is action in this game. The spread, not a bad thing. 15 cents for the kind of return we may expect. I can live with that. Okay, then rotation, not a bad rotation at all. Not a bad rotation. And now, let me just go to the company. I want to take a look what's happening with that particular company. Let's see what we have here, what we're working with. And here we go, CLVS. The company is still down 61%, but look at the chart itself. Right here, Trend Fibonacci. I got it. Trend Fibonacci right there. I don't even have to look at it. And let's go to it. Okay. You see this push higher, this trend continue all the way to 33. So that's on the table. Now look at this bar. You see this power bar, the green bar, absolutely power bar. Buyers are in control. Also some other points to keep in mind. Look at this massive volume in this area, 972, massive volume. Next stop, 578. If we were to have a drop to 578, volume buyers are going to come back to it. Absolutely an opportunity. We have that price rotation. We look at this. We see how right here, again, $11 won't be a surprise. All the way to 17. Now, let me go lower. You see? There you go. Look at, once again, look at it. Look at the heat map. Now, this time, this is a strong heat map. And look at here, roadkill. Not sure if you're familiar with roadkill, but this is the buy signal. There you go, 578 all the way to $17. This happened in 2 weeks. Look at here. So now, yeah, in 2 weeks, 1 week, 2 weeks. So in 2 weeks, if we were to identify this pattern, 2 weeks gave us at that point 149%. 149% in 2 weeks. Yeah. Think about that. What may happen to our options in 2 weeks? Okay. So shouldn't be a surprise. This is the game that we're playing. And now, of course, if I were to look at this, let me move it this way. Trend Fibonacci is this way. There you go. Where is the support? 1, 2, 3. 3 consecutive weeks. 783. Can it touch 783 again? Yes, why not? And after that, just judging what we have in front of us. So take this information, take it this, and we're talking about $13. I'm going to put $13 here. $21. That means 100%. 100%, conservative speaking, will move us at least $1 on the option to the upside. That will take you 100%. There you go. So we have this, that was the last on November 7. We're looking at, you see there's a negative bias here, minus 61. Last time they produced a little bit less than that. February 25 earnings. We still have time, got plenty time. And what else can happen there? What else can happen? A lot can happen in the middle. So we got time, we're positioned. There we go. Okay, this is very important. Always understand. Go ahead.
I don't know now. I don't know now which one to take, which trade to take.
Which trade to take?
I would. Yeah.
Well,
BA
I will go like this. Clovis.
Or,
okay, first off, BA
or SPY.
BA. I want you to take that trade. Okay, mainly because it has time, so it will reduce your stress. Okay, and it already show us that has potential to quickly develop. If someone thinks that the drama with BA is over, far from it. That has a lot of fuel. It's just starting. I'm not saying that they can make a comeback. I'm saying that it's pretty severe what is taking place. It's severe. It's not a joke. They are killing people.
What's the expiration for the BA?
April.
Oh, yeah, it's got time.
Yeah. And then you can continue your education. Clovis Oncology, I want you to be there. It's your pick.
Okay.
You got to go for it. You got to go for it. And it has the same potential.
Yeah.
So
I'll pass the SPY then and the Tupperware.
The SPY, I want you to pass on the SPY because with the SPY, still is a volatility issue. So it might get us a little bit tense if it doesn't move that fast. We can get tense. Okay.
Just like what happened before when we exited.
Yeah, exactly. Okay.
Yeah.
I could have been a nice 100%. Okay. So, and just to finalize this intense coaching session. We're on follow-up mode, always connecting week by week, see what we have, although we communicate on daily basis, doesn't change. I'm gonna go and take a look at where are we with Freeport. Everything goes well. The company reports as you expect, and then the stock goes the other way around. But look at it. I just wanna remove this because this is what I wanted to look. I want you to look at this. What do you see here, Alan?
Volume.
Volume. But if you look at the chart,
Strong volume.
look at this candle. This is the 50. Listen to the weekly.
It's that's an ending candle.
Yeah. So it's there posing. Look at that balance.
They're fighting back.
They're fighting back.
The buyers.
And not only that.
The buyers are fighting back.
Yeah, not only that. Look at this. This is like.
Yeah.
This is just crazy. Crazy, man.
Yeah.
Crazy. Look at the rebound on the point of control. Okay. Look at the volume on weekly. This is real money, real transactions. Not a coincidence. Look at what it's telling us on the heat map. Look at the two roadkills entries. One here. Look what happened there. Look at the second one. Maybe just playing a little bit, but massive, massive volume. Buyers are in this area of control. Okay. So that's something that we want to take a look at it. So it's just amazing that although we're being defeated for now, it's just coming back.
For now.
Yeah.
Yeah.
And I'm, like I said, my guidance, I have to come back with the guys tomorrow again for more guidance on what we're doing, what we have. And absolutely, I want to just picture this. First thing, I'm just going to share this because this is not the end of Freeport. We still have 4 weeks, okay? I want to make sure everyone understand that. We have 4 more weeks to go. Let me see. Okay, I'm going to save this image, and then I'm going to come back. But
right now, I don't think there's buyers right now in our call.
But remember, the call, they all call and the put, they're derivatives. They have this, they're correlated with the price action. The price action, just like TIVA. This thing goes up like this, we're back. Easily, we're back. And now look where is the reverse confluence between the 50 exponential moving average and the 38.2% Fibonacci. Plus point of control, plus this. I'm not going to share this with the war room, I'm just going to provide guidance. But if you take a look at this, $16. And that can happen in 1, 2, 3, 4 weeks gives us, let's see, 4 weeks give us $2.17. We're at 11. So 2 weeks will give us $2.32, $13.57, $1.50 from 15 strike price. So at least the door will be open for us to exit a break even or reduce our potential loss. Very important as well. Very important. So it's on the table. It's on the table based on what we have on the screen. Okay. So I'm gonna keep this.
Oh, so we're not gonna make money from that then?
It all depends. It all depends. Remember, we cannot graduate exactly how fast it will move. We have the evidence that there's some potential of $2 at least in 4 weeks. And let's see, another week bar, the week bar here, 10%, that's $1.23 in a week. So if we get 2 big bars, so that will be still $2.50, $3. We can be close to 15 strike in about 4 weeks. It's about to be seen, but it's what we have so far. So we have to work with that. What we know that can happen, we cannot get too far from the reality. But if the company keeps writing guidance, we absolutely are in the money. I'm still surprised why it says that they report tomorrow, but it's to be seen really because they reported today. It was a good figure, so we have to know exactly what happens. All right. So this is about to close the call. I'm gonna text you later Thank you for joining our follow-ups, okay? Thank you, Alan.
Okay. Thank you. Thank you, Jose.
Okay, perfect.
Appreciate
Bye-bye.
you.
You're welcome.
Bye-bye. Ciao. Ciao.
Ciao.